The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Hey, Rik. Busy week last week.
Busy week indeed. Much less this week, so that's a good thing. But yeah, no, it was a busy week, but it was also a very fun week. It was a lot of Andrew, a lot of in-person Andrew, but it was a very fun week.
Yes.
Yeah, two dinners, two really good dinners as well, I think. Quite a few C-suite people coming to talk to us about things that really matter. Organizational change on the one hand, and then risk of future technologies on the other. And that future technology thing is something that by accident has been on our plate a couple of days already over the past 12 months. We had the topic for the first time at our conference in Brussels in 2025, quantum computing, where very last minute I had to jump in to replace the moderator. And for me, that was a very steep learning curve, talking to experts about a topic that is so incredibly conceptual. But it got even worse or better, because at Cybos, I could jump in last minute as well on stage with a panel of academics that are actually building software on computers that don't exist, and then an executive from a Spanish bank, head of quantum, to talk about the challenges and the opportunities. It was still a very theoretical conversation, but a real eye-opener. Now, last week was different.
Very different.
It didn't end up into a more open conversation about challenges and opportunities about quantum computing at large, but specifically on how. Well, it was a very general conversation on authentication and then what comes next, and then we got it much more specific towards the quantum safe authentication, which doesn't require a computer, that builds on quantum algorithms, but there are ways to be quantum safe already for a future where everything risks to be disrupted in a way. I don't know what you thought about it. I wrote a blog about it, and I'm sure that you want to discuss that. But what was maybe your main takeaway of the dinner last week?
So I think first, for context, we looked at, as you say, authentication, specifically user authentication in banking applications.
Yep.
That was our approach, where we were coming from. And to begin with, there were a couple of things that were really interesting that came out of the comments for me, because we were discussing about this tension between friction for the user and the level of authentication. So the degree to which you can trust that user is the user, right? And you and I both at the moment, I think that a lot of people use something that we regard rather frictionless, Face ID or something like that, where I think in Belgium you guys use It's Me a lot for...
Still some friction though, at the moments where it matters. And that was also part of the discussion, like we need to look more into building friction instead of frictionless sometimes.
Well, and there were a couple of the first surprises for me. There was some comments around the room that said the degree of acceptable friction is generational. And that sort of stopped me in my tracks a little bit when the people said, oh, young people, they don't want any friction. They just want to, just let me through, let me in, let me get in there. Whereas the older demographic is quite
context
happy
that includes
friction.
you.
Well, yeah, but I have to cater for old people like me, But older generation is more comfortable potentially with the higher friction, believing that more friction means it's a higher degree of trust. And so that was the first thing, was that the degree of friction is heavily linked generationally, according to some of the people in the room. And there was another comment that said, the more you talk about trust, the less people trust you. And
Yeah.
somebody had called that the
And
trust
it makes
paradox.
sense, eh? I commented on a post on LinkedIn today, which was all about every day we start reading these articles about people that have been frauded, and not everyone is that tech savvy, etc. But essentially, it's not about technology only, and it's not about only banks can solve the problem. But yeah, it's in the news a lot.
Yeah. And so when we were talking about trust, the conversation then developed into, what's the most trustworthy way of doing authentication? And I think we might have inadvertently spiked a new revival of paper grid cards.
Yeah.
Because that came up as being one of the most safest, forget two-factor authentication and things like that. Good old printed paper grid cards are one of the most safest ways
Is
of
that? That's
that.
must be
Well,
from before my time.
so it's literally a sheet that your bank would print out and give you with a whole lot of codes, and then as you use them, you just cross them off.
Okay.
So it predates the
I
time.
pretended to know it during the dinner, but actually I didn't have a clue what they were talking about.
It predates the times when we used to have those dongles that you'd be able to read where the number changed every
Yeah,
couple of
that was
minutes and that kind of thing. Now, of course, is that really authentication? It's certainly not ID verification, because anybody that's got your logon credentials plus your
yeah, but
grid
it's
card,
authentication.
it is authentication, yes, and that's a thing that, and we were then
Sure,
discussing.
Dave Birch would disapprove, though.
Oh, Dave Birch would say, because it's not identity verification or identity
Yeah.
validation, should I say. It doesn't. It's just authentication. But then the conversation got into the safety of various cryptographic algorithms. So, as we all know, when you type your password into your banking app or on your mobile or whatever, that password is never stored in the clear. It hasn't been done, believe it or not, Rick, way before your time. As a database administrator, I used to be able to read people's passwords back to them because we used to store the passwords in the clear, and people would phone us up and go, "I forgot my password. Can you just read it to me?" Go into the database, and we could. It goes way back, right?
Yeah.
Now I am telling my
Good old
age.
days.
But, well, bad old days, because, of course, anybody working at a call center could get your passwords. Thankfully, those are way behind us. And now passwords are all scrambled using a cryptographic algorithm, and then they're unscrambled by the application to be able to match up.
Mhm.
And that's where the conversation started going along the lines of, what happens in a world of quantum computing? Now, that's where the conversation had nothing to do with the opportunities for banks to use quantum computing, but it was what happens when the bad actors can decrypt every single scrambled password digital key that is in use in your systems today.
Mhm.
And it's not just passwords, it's digital document signatures, all those
keys.
DocuSign documents and everything like that, right? It actually goes even deeper than that. Most cryptocurrencies are by definition based on cryptographic algorithms. So there is actually a crypto countdown clock, which is a couple of years earlier than the Q-day clock. Q-day being the date that most of the industry, and specifically the Cloud Security Alliance, thinks that quantum computers will be able to break cryptographic algorithms freely. And that's set roughly as 2030. If you go by the Cloud Security Alliance, they're actually very specific. It's a date in April 2030. So we've got 4 years, 34 days, 8 hours, and 33 minutes. I've got the Q-day countdown clock on the screen next to me. So what happens in a world when somebody else can decode all your passwords? Not just the passwords you'll be using then, but more importantly, all the passwords you're using today. There's this big thing, harvest now, decrypt later, where bad actors are harvesting. You see all these data breaches and everything like that. They're harvesting all that information now because when quantum computing becomes available to them, they'll be able to log on and act as you or me. And that was the core that we were getting to in the discussion. And I think at first
there was part of it. And for me, like, that is as much of a problem as breaking tomorrow's authentication. Especially when you talk about an industry like financial services built on trust.
Because trust goes. If anybody can get into your bank account, trust goes. But I think that was the first of the misconceptions around the table that took me a little bit by surprise, is that initially I think many of the people that were sitting around the table thought that it required a quantum computer to fix the problem, which you had said.
Yeah, well, we'll need a couple of years of additional education in that respect towards industry. And I remember that was one of the key lessons from the Cybel session as well. And that happened here again. Quantum has a severe risk for everyone, not just financial services. But there's only a very small niche of professionals that actually understand the severity of the risk. And that became pretty clear in this session, which is why I thought it was such a powerful conversation as well.
And I think when the penny started dropping, when people realized in order to have quantum safe cryptography, so cryptography that cannot be broken by quantum computers as currently envisaged, it doesn't require you to have a quantum computer. It requires you to change the cryptographic method that you're using today, which introduced me to a new word that I'd never heard of. I love hearing new words because then I can throw them into conversations and make people think that I'm smart. Never works, but I can at least try it. Crypto agility. That was a new one on me, and it's quite self-descriptive. So the minute it was said out loud, I understood what the person meant when they were saying it, that by crypto agility, they mean how easy is it for you to change the cryptographic algorithm that's currently being used in your bank. Now,
or how easy can you adapt to a new reality where the current cryptographic keys, etc., may no longer hold the same security as we assumed that.
And I think that one of the challenges that banks face, one of the many, because we know banks face a lot of challenges all the time.
So bread and butter.
Is that most banks don't actually use just one cryptographic algorithm. Depending on when systems were installed, what the flavor of the day was at the time,
how sensitive they are,
how joined up their IT internally and etc. All sorts of reasons, most banks use multiple different cryptographic algorithms in multiple different places. I believe that there are very few, and I would love somebody from the audience who's listening to get hold of us if in their bank they can go, you know what, we've got it all sorted. We only use one form of an algorithm. We can swap it out. We're using a third-party provider. We're doing it ourselves or whatever the case is. And it's quite minimal to be able to swap it out. On that note, we did ask one of the experts, technical experts in the room, how much of a pain it would be to swap out a cryptographic algorithm, for online, for mobile banking, for example. And as all techies, his answer was, it depends. That in some cases, it could actually be quite simple. And in other cases, it could literally be doing like doing open heart surgery. But it appears that in almost every case, at the very minimum, you would have to re-enroll your users. So we were back to friction and difficulty and whether or not people wanted to be the ones that had to propose a new user registration. So that was something, there was so much that I think we learned that evening. It was interesting to me, and you have noted it in your blog as well, that almost none of the banks, not exactly none, because there were actually two banks that were looking at quantum at the moment, but all of the rest of the banks, quantum wasn't even on their radar as far as they knew at the moment.
Maybe from a distance, indeed.
Or
And that
maybe
kind of
something to track.
did it surprise me? Maybe not so much. But the feedback afterwards on the question, would it be on your roadmap after hearing this? That surprised me. Because if
Yeah.
you know that you have X amount of projects on digital identity authentication coming, so you may need to renew some of those things because of regulatory requirements, and you know that in the future you must have a quantum safe solution, why not considering that last element or in the first blocks of the roadmap? And the feedback seemed to be, if the regulator doesn't push us, we're not interested.
Yeah. Yeah, that was a
And
big...
that was a bit of a scary thought, as if banks are serving the regulator and not the customer that expects their banks to hold their data safe.
I think that may be a bit of an unfair comment.
Yeah,
to
maybe a bit blunt. I
I think
agree,
I
but
think
that's a
that
bit how it felt for me.
I think that for them, they have got so much stuff to deal with on their plate at the moment,
Yeah.
right? They've got change coming from every direction and customers demanding new things all the time.
Because I must note, there were quite a few who did say that maybe we will add it in the RFP process when we need to look for new solutions.
Yes.
So
Yeah.
would it help build the momentum for quantum safe technology, I think.
But again, we're talking about quantum safe cryptography. We are not talking about
Quantum
banks
safe technology.
Yes. But quantum safe technology, not talking about banks having to do quantum. We're
No,
not
not at all.
saying banks need to be going out and experimenting with quantum. Sure, great.
That's another round table somewhere.
That's
in the far
another
future.
topic altogether.
Yeah.
But quantum safe technology, and specifically quantum safe cryptography, is something that people should seriously be thinking about today. Another thing
Yeah, that's
that
also what I
really...
said in my blog. Quantum computing is sci-fi, but quantum safe computing isn't.
Yeah.
In the United States, it's a priority for most organizations already, and we are in Europe much less sensitive for the topic for now.
Well, another thing that surprised me when we're talking about new projects coming up, the EU digital ID. I asked a simple question. Does the EU digital ID use quantum safe cryptography? Because that is a project that is right now on the horizon.
Yeah.
And the answer was not yet. That the current specification of the EU digital ID does not include a quantum safe
depending
element.
how you interpret the regulation, because it must be safe, but what's safe?
Safe by today's standards, and that again, that surprised me. You would think that people that are working and
No, but that's the essence, Andrew. Based on today's standards, in the United States, those standards would probably mean, and I say probably because I'm not an expert, would probably mean quantum safe standards. In Europe, that is not the case.
So the people that are working on these big change projects or the projects that will impact financial services in a big way, like PSD3,
Mm.
like the EU digital ID wallet. I would have thought, incorrectly so, that they would have had this in the back of their mind, exactly as you said, to think, well, we're going to do this mandate,
Mm.
the use of EU digital ID. We might as well at the same time mandate this, but apparently that's optional. So the call to action for any bankers listening is, if you're involved in a EU digital ID wallet, why don't you make sure that it's quantum safe at the same time? Because in 4 years' time, you're probably going to be thanking us.
Well, I don't think it will take that long. The key question is, do you need to wait until the supervisor or the regulator mandates it? And that comes at a cost. Because if you need to do an implementation anyway, why not consider today's regulation and potential next regulation, or at least tomorrow's safety nets, and do that one implementation instead of doing two? At the end, I think that will still be cheaper than waiting for next regulation to make sure that you are aligned with what others are doing as well. I know it's not competitive space, and I know that it's still very conceptual and it seems far, far away, but it may not be. We don't know when the end date of quantum is. You refer to 2030 April, but it might also well be 2028. Who knows? And it may be Oracle or IBM being the first with a proper, functional, and stable quantum computer, but it may also be a government institution from Russia or China. What are we waiting for?
And funny you should mention 2028, because according to the quantumdoomclock.com, see, I always find these interesting things. The algorithm used that most cryptocurrencies are based on, which apparently is ECC 256, is predicted to be the first to fail, with a prediction date of 2028. It's only 2 years away. RSA 2048, which is largely used by banking and web applications, 2029. And RSA 4096.
It's in 3 years.
Yes. RSA 4096, which is government and military, is predicted to be the last line of failure, which is 2030 plus. Now, park what I've said about dates, but it starts getting really scary when you see government and military quoted on that same at-risk list. Now, I'm sure that the government and military are working hard on implementing quantum safe cryptography way before the time. I would hope so. Otherwise, this whole thing might descend into a bad episode of Black Mirror come to light.
And that was that reminds me of the whole millennial bug thing. Younger people may not remember, but there used to be this thing where we switched from 1999 to 2000, and there was an incredible fear that it would be a complete meltdown of computers because they were incapable of going to from 1 to 2 in the year. So everyone needed to prepare to make sure there was no complete blackout. And people are now referring to that risk, that meltdown of the global economy because all computers will go down. And I did feel some comfort in the idea that that never happened in 2000. Everything went fine. And that conclusion may also mean that with the risk of quantum, it will not end up as bad as some say. Not sure if we should rely on that comfort, but on that note.
Hold on, before you draw a note on that note and say goodbye, there is a difference because you're welcome, by the way, that the world didn't melt down in 2000. I was CTO of a startup at the time in 2000 when that
startup.
year, a dot-com startup owned by the Guardian Media Group.
Oh.
And we were very concerned. However, the reason we claim, all the techies of the world, the reason why we claim there was no global meltdown
You
is
prepared.
because we did our jobs.
Yeah.
We fixed all the systems before those clocks tipped over. There were a couple, not in our organization, but there were some limited things that came up around the place. But all the government and infrastructure and everything like that, you knew what the problem was, and you couldn't
You knew
stop
by when to
time.
fix it.
Correct. You couldn't stop time. And I think that the biggest difference between preparing for Y2K and preparing for Q-day.
Why was it called Y2K, actually? It's the first time I heard about that abbreviation. I had to look at it in Google. Yeah, like the grid cards.
The year 2000. So 2K being 2000
Yeah.
and the Y,
Yeah,
instead
year
of
two.
Y,
Yeah. Okay.
Y2K, the Y2K bug. And we must have spent nearly a year preparing for that and running simulations and forcing the system clocks of our computers to go forward because you've got to do QA, right? How do you do QA? Well, you reset the system clock and you set it in advanced state and things like that. You set it to 5 minutes to
Probably
midnight.
was the year when I, for the first time, was allowed to go to a party to celebrate New Year. Or maybe the last time I had to stay home. That's about like the timing we're talking about.
So, what I was going to say, and this is the on that note that we can bring it to an end, is that Y2K, the whole world knew and had that deadline. So we're all working towards it. Here, there is no concreteness in the deadline. There is also a lot of skepticism amongst highly educated people whether or not quantum computing will actually be a reality within their lifetime. So because of that uncertainty, I believe that's what's holding back action
Yeah, of
and
course.
budgets, and there is no urgency. So I do think that you're right, is that for the
I heard a
moment,
speaker at Money 2020, I think that was in 2021 or something, saying that within 4 years we'll have quantum computers. That's 2 years ago. Didn't happen. Well, 2020 was lockdown. So it must be 1919, the first year in Amsterdam.
2019, you mean?
2019, sorry. Now you confused me. Yeah. Anyway, doesn't matter.
Yeah.
But it's true that every few years they look further and further ahead. It's a bit maybe a bit like the AI winters. We don't know. But does that mean that you can sit on your laurels?
So on that note, we'll bring today's episode to an end. Thank you for an entertaining discussion.
Nice. All right.